Good afternoon. Today I have Ayata Colbert of Mason Mcduffe, a mortgage professional. She's going to talk today about Homepath mortgage financing. This is like one of a series of podcasts, web events I'm doing. My name is Jonathan Fleming with Remax Accord in the San Francisco Bay Area, and I sell homes in the Bay Area. You can also reach me at localhouseinfo.com. You can also reach Ayata Colbert at Ayata Colbert on Twitter as well. So today I'd like to welcome her. And Ayata, please introduce yourself and let's get started to talking about Homepath mortgage financing.
Thank you so much, Jonathan. Once again, my name is Ayata Colbert, and I'm with Mason Mcduffe Mortgage. We're located in the Montclair Village of Oakland. And like Jonathan stated, I wanted to go through the major pinpoints on Homepath mortgage financing, which is pretty much a jewel. And so I just wanted to run through the particulars, whether you're a buyer or an investor or even someone that's wanting to purchase a second home. Homepath mortgage can be very beneficial. And so just to go through the major pinpoints on Homepath mortgage, it's definitely up to 97% loan to value. And with that 97%, you can put down 3% towards your down payment. That down payment can be whether in the form of a gift or a grant. On this particular property, there's no appraisal required, so that definitely saves you, the buyer, a lot of money. You know, appraisals can run anywhere from $350 to $400, and so not having to go through and pay for that cost is a huge savings.
So when
in addition to that,
let me just
go ahead,
ask you a
Jonathan.
question. So when people, like, say for example, somebody says, okay, no appraisal, are they assured that the property is worth that amount of money, or how are people dealing with that issue?
Okay, so on the Homepath property, the reason why there's no appraisal required is because it's a Fannie Mae owned property.
Okay.
So the value is determined by the purchase price. So if the purchase price is $300,000, then the value is determined by that purchase price. And so that is why there's no appraisal required. This is a Fannie Mae owned property, and so it's kind of like a Fannie Mae owning, lending on their own properties.
Oh, okay. So okay.
Exactly. So the requirements on these particular properties are very minimal.
I like that. Now, what do you think about in terms of, because I'm going to ask you some questions, because a lot of times people, you know, they email me questions, they say, okay, ask her this question. So so I imagine that saves you some money because you don't have to get an appraisal no more, correct?
I'm sorry?
I imagine that saves a person money.
Exactly.
Okay.
In addition to it being no appraisal, it's also no mortgage insurance.
So that's the unique difference with FHA then, correct?
Exactly. And so this is why this is a unique way that a realtor, such as yourself, can get a buyer into a home, and it's really a streamlined process. All right. So no monthly mortgage insurance is huge, because usually on the FHA, for example, you have your monthly payment, your taxes, and insurance, but also there's a monthly mortgage insurance added on to that total payment. So with Homepath, that's also eliminated. So the cost of your monthly savings is even better.
You know, I was thinking like, say you're a home buyer, and that's pretty much who's going to be listening to this talk today, home buyers. If you So you're saved even mortgage insurance and appraisal fee as well, because when you do FHA, most of the time you have mortgage insurance, correct?
Exactly. Not only do you have monthly mortgage insurance, but you also have an upfront mortgage insurance, which is calculated into the loan. So you can imagine with a Homepath property, a Homepath financing could be very beneficial to a buyer that's has minimal amount of money for down payment to begin with.
Yeah, I can see that. I can see the benefits for a home buyer all the way right there, because that saves them money on their monthly bills.
Right. The other unique thing about the Homepath financing is that you can get seller contributions. Okay, so if you're looking on this flyer here, it says up to 9% for any loan to values that are less than 75%, and up to 6% if it's greater than that.
Oh, that's unique.
Okay.
So okay,
And
so up to 6% for all other LTVs. Like, give us a price example. Like, say if the house is 200,000, and the buyer is putting down
right,
what, 5% maybe?
right. So let's just say the purchase price of the property that your buyer is buying is 200,000. Okay, and they're doing 97%. Okay, of that
Mm-hmm.
property.
Okay.
So you're talking about $194,000 is the loan amount.
Oh, see that? Okay, that's
You
a
got that?
considerable savings. Okay, I understand that, because I think that's what people are looking for is, like, for example, getting that 6% contribution, and how it could work in and saving them, like helping them with closing costs or something along that
Exactly. So
line.
if the loan amount is right, so if the loan amount on that property is 194,000 and the seller could contribute up to 6%, 6% of 194,000, you're talking about, let me see, 6% here, you're talking about 11,000, over $11,000 contribution towards closing costs. So that's huge in the grand scheme of things.
Okay.
Hmm.
Now, when somebody's like, say for example, what's the process for somebody like? Then I'm gonna ask you about investors in a second. But tell me this: what's the process for somebody interested in Homepath?
Okay, so the process is like any other home process. The first thing to do is get pre-qualified, right? And so the first thing is credit score. So credit score is a huge factor in any loan that you're looking at. So let's just say you're looking at a loan amount that is 417.
Okay.
Okay.
And they also should call you, correct?
The minimum. I'm sorry.
And they also should call you first, right?
Right. So that's the
Okay.
first thing. So
Okay.
definitely, you know, they contact me. We get together. There's a series of documents that I usually ask a client to bring in. So those documents would be, 2 years W-2s. If you're self-employed or you have any rental properties, you can bring in your 2 years tax returns, 2 most recent check stubs, and 2 most recent bank statements. So not a lot of documentation, but that's the initial documentation to at least get your income qualified. Okay. The
Hmm.
next step will be pulling credit. Okay.
Okay.
And so I've kind of outlined here what the credit score needs to look like. So we're going to just say this is an owner-occupied property, and the buyer is only putting down 3%. The minimum credit score here is 660.
Hmm.
So for 417 purchase price, 417 and under, the buyer's credit score only has to be 660. And so a couple of notches above FHA, because FHA is 640.
Okay.
But you're talking about only bringing in 3% versus 3.5%. Got that?
Interesting.
Okay, so with
Interesting.
a 660 score, right? Primary residence, 6% towards borrower's closing costs, and the eligible properties here, Jonathan, is 1 to 4 units. So you're talking about a duplex, 4 units that this buyer can definitely be eligible to purchase.
And I see a condo, no certification required as well, right?
And that's huge because you and I know the condo market, has taken a big hit in the last couple of years. So to be able to purchase a property with no condo certification is huge. But once again, the reason why that this can be done is because it's a Fannie Mae program. Okay, so this particular program is definitely designed to assist in the purchase of Fannie Mae owned homes, and
No.
those owned homes are
Okay. Now, if somebody wants to get, say if somebody wants to get pre-approved for a Homepath financing, what's the turnaround time? Like, say if I was a buyer and I met with you on a Monday, and I brought you all my paperwork,
mm-hmm.
what's the time frame in terms of you letting me know if I was even Homepath approved?
Okay, so the first thing in getting in Homepath approval is if you're working with a realtor such as yourself,
Mm-hmm.
your realtor, the buyer's realtor would have to go on the Homepath website. That's the first thing.
Okay.
It's www.homepath.com. So the first initial step is the realtor identifying a particular property and making sure that that property is first Homepath eligible, okay?
Okay.
The second step, so once they meet with me, we went over all the documentation, it's 24 to 48 hours for my office to turn around a pre-approval.
Oh, that's good. Okay. And let me
Exactly.
I have a couple questions else too. It's like, say for example, like Homepath, like I've noticed, like when I've worked with different, buyers who buy their first home or buying a home period, I noticed that a lot of like properties that Homepath approved, and is the closing time a little bit shorter for Homepath than other types of properties, or is it still the same 30 days or more escrow timeline?
Well, with Mason McDuffie Mortgage, our closing time is 15 to 20 days.
Okay, okay.
Yeah.
That's what I
So
thought.
24, yeah, so 24 to 48 hours for me to sit down with the client, go through their income, go through their credit, making sure that they're on the up and up on that end. It's only 24 to 48 hours for us to say, okay, based upon these particular criteria, you're qualified to purchase this amount. And I'm calling you as a realtor to say your client is approved to purchase up to, whether it be 300,000, 400,000, whatever that amount may be. I'm letting you know that. After you have solidified a contract, fully executed contract, give to us, we order the appraisal, we're doing all that. It takes us 15 to 20 days to close a transaction, whether it be a Homepath, FHA, a regular conventional loan, the closing time is the same.
I like that. Definitely. I think that is, like I said, that's an interesting path. Now, tell me this: how? Okay, so I think, what more? What you have some more stuff for the want to get into how it could help investors too. So.
Right. So not only is Homepath beneficial for someone that's purchasing a primary residence, but also for someone that's purchasing a second home or even an investment property.
Okay.
And so with an investment property, you can purchase up to 90%. Okay. And it says high balance here. High balance is for any loans over 417.
Okay.
Okay.
So a high balance over 417, and okay, I'm an investor. I'm looking at buying a property for, say, 300,000. I find out that it's me and my realtor. We both know it's a Homepath. What am I looking at in terms of my credit score is maybe my credit score is 680. What would somebody be looking at in terms of how much money down?
So if the loan amount, right, so if the loan amount is going to be over 417, so let's just do a scenario here. So let's just say our purchase price, our loan amount is going to be 500,000. Okay, so at 500,000, we're over that 417 mark here. And so as an investment property, it's 65% that it drops down to.
Okay.
And it's a 740 score minimum.
Okay.
And so if we go back up here, 417 and under, an investment property up to 90% loan to value, and a 660 score is the minimum.
Okay.
Okay. But if this investor has a lot of money, they want to put down more, and they're going to drop down to putting 20% or more, a 620 score. So that's pretty good for an investment property.
That's awesome. I would think.
Right. And but the reserve requirement for an investor is 6 months. Property, insurance, taxes. Okay.
6 months.
For a 6 months reserve. So if the monthly mortgage payment with taxes and insurance is $2,400, you would need to have 6 months of that set aside. So $2,400 times 6. So
Okay.
you're talking about 14,400 reserves.
Okay, and for like new investors, can you just explain to them what, for example, PITI means? Sometimes people do not understand our lingo. So what would you say PITI means?
So PITI is principal and interest, taxes, and insurance.
Okay.
So that's your monthly mortgage payment plus the taxes and the insurance. So all that, let's just say it came to $2,400, we'll have to times that by 6 months, and that'd be $14,400 that you would have to show that you have available at funding, at closing.
Mm.
Right.
That's
And
awesome.
so the reason why they're asking for that much as an investor is because you figure an investor, you should have some cash flow set aside, you know, you're going to be getting, so investors, they're looking for a lot more than they would someone that's going to purchase the property as their primary residence.
As their prime, okay, okay. So they, I mean, it seems like it's an awesome program where if you're an investor, you have a, less paperwork, less hassle, and less stress the whole process, it seems, with Homepath.
Definitely, because if you think about it, on conventional financing, you know, as an investor, you're talking about putting 25% or more down. So the criteria is a lot more stringent on a conventional financing as it would be a Homepath. I mean, it's really simple. You know, the realtor goes to the website, looks at the properties, and not all the properties are in horrible condition. By the way, Mason Mcduffe, we do not do Homepath renovation loans.
Okay.
We can only finance the regular Homepath. So when your realtor or you as the realtor is looking for a property for your for a particular buyer, whether it be a primary residence or an investor, just be sure that the property that you're looking for says that it's eligible for both. Okay? Because if the property that you're looking at is only eligible for the Homepath renovation, that is not something that we can finance.
Okay,
So
okay,
as long as we have both logos, okay,
okay,
and both logos will look something. Both logos will have the Homepath renovation, and it'll also have just the regular Homepath logo on the website.
okay.
Okay, so once you're in the clear on that, and then we're all good to go.
I think that's a,
Yeah,
you're halfway there. You're pretty much a home run going forward in terms of you
exactly.
process. Okay.
Mm-hmm.
So I
So
think
it's
it offers you a good opportunity, like whether you're a buyer or investor. In terms of just getting started, I think the good thing about this Homepath mortgage financing is a lot of people are just they're not aware of it and they don't know what it is, because I think FHA has like captured everybody's attention for the moment. However, just like anything else, you have to be open to new things that are out there.
right. And it's just being, you know, everyone being educated. You know, you hear about Homepath, you see it, but it's not really knowing how it works and how to go about finding the properties. You know, some people think, oh, you know, these are properties that are not in good condition. But if you go to the website, you'll definitely see that there are some properties on there that are pretty good condition, hardwood floors, you know, dual pane windows, and you're talking about your buyer having to do absolutely nothing, you know, except maybe changing paint if they want to move into these properties. So it's a great program. Fannie Mae is definitely putting more and more properties out there on the market. So it's definitely a great time for agents such as yourself to go ahead and get buyers into it. As of yesterday, they definitely started a huge incentive for the buyers, where if they purchase a Homepath property and it closes by June 30th, Fannie Mae is giving a 3% towards closing costs. So that's like major, you know. And for the seller can still contribute towards closing costs. So you're talking about a huge amount of savings here.
What do you think about, just to sum up, what are your thoughts on, well, you know what, I like to say is, I think Homepath is a great product, and I definitely think people should definitely take a look at what's the best way for people to reach you in terms of your phone number, and I definitely know you're out there on social media as well.
Definitely. So the best way to reach me, my contact information is right here below. My cell number is always the best number, 510-229-8636. You can reach me on email at acolbert@mmcvcorp.com. You can also find me on Twitter, where I'll go ahead and list a few updates a day on there, and that's at Ayata, capital A-Y-A-T-A, Colbert, Colbert, all one word. And you can find me on Facebook. I'm on there, Ayata Colbert, California Mortgage Professional. So I'm definitely trying to stay out there and share some information so that buyers are educated, or even realtors can get information on different products and programs, whether it be Homepath or FHA, conventional programs, and so forth.
Okay, 'cause you definitely do FHA and you do all the different programs as well. As well
Right. So
as the
there's,
city of Oakland and
in
everything as
addition to
well.
Homepath, there's many different, there's many different things for, whether it be first-time home buyers or whether it be a repeat buyer. There's a City of Oakland program that we're a lender for. There's a CHF program where buyers can get 3% towards down payment. That's another spectacular program. Then there's the FHA. You have
Bond
conventional
program.
programs. You have the CalHAFA. There's programs for, police officers and firefighters. So there's so many things that we have to offer to definitely get someone into a home.
Okay, well, listen, let's conclude this because this has been awesome in terms of just information for people. Alexander,
Yeah, but
go ahead.
Homepath is just a unique product where it's just Fannie Mae owned property.
Perfect. Fannie Mae owned. Okay, perfect. Well, listen, I'd like to thank you for coming on board today and giving people some awesome information about buying real estate. My name is Jonathan Fleming. You can reach me at localhouseinfo.com on the web, as well as you can follow me on Twitter if you like at Jonathan Fleming as well. But definitely I look forward to talking to everyone. You can reach me at my 800 number at 800-892-1755. And Ayata is she's close by to get you any help that you need. Thank you.